Hi everybody, welcome to another update on the stock screener. We just got financial results from Monument Mining. I think they were good. Stock price is still up, so that's outperforming the other miners. I just see here Majestic Gold very bad, keeps on dropping, but that's not our concern. We are in Monument Mining, and let's take a look at the results. It's very complicated, but let's try to understand it. So I think cash cost of 917 is the most important here. That's the cash cost of the sulfide production. Where is the cash cost? There are so many numbers here. Fourth quarter. So you have the oxide. I'm not interested in that, because that's going to end at some point. So this is the most important. The sulfide production cash cost is 917. So I have inputted this cost in the NPV calculation. Other than that, we have production numbers as well. You can see it here. So the oxide was 1.4 million revenue, but I'm not interested in that. I'm only interested in this here, sulfide. So this is the amount sold, sales 1,100, and that gave 1.7 million. If you do this number times the realized gold price, then you get 2.2 million, which means that they only get 80% of that sales price. So 80% should be used for the revenue based on this here, because they sell a concentrate. So I used 80%. Another thing is they sold 1,100, but they produced 4,400. So that's 4 times more produced in that quarter, in the last quarter of June, than they sold. So they sold only 1/4 of what they produced. Okay, that needs to be taken into account. Also, when we look at the production numbers for the last quarter, then we see these results. So this is an important table. So let's take a snapshot. And put it somewhere here. So what did we produce in the June quarter? 1.66 grams per ton head grade. That's lower than expected. So we expected 1.9. Instead, we see here 1.66. It was 1.8. So the grade is not that good anymore. Let's hope that the grade goes back up. What should the grade actually be? It should be, yeah, 1.6, 1.8, 1.9. So it's at the low end, 1.66. That's in the June quarter. So yeah, maybe we can just use 1.66 here. Okay. I'm just using these numbers. So these are real numbers. The amount of ore processed, 1, 2, 4, 7, 6, 8. 1, 2, 4, 7, 6, 8 divided by 3. So we know per month. Per month we have 4, 1, 5, 8, 9. So that's also lower than the estimates. And well, of course, they were in ramp up period, of course. So only in June, July, August they are at full capacity. So these numbers were lower. It was at 30,000, then 40,000, and probably here we are approaching the ultimate capacity. So how are we going to do this? Yeah, let's not sure how to do this. Let's just use 41,589. They don't give us monthly numbers, so we just divide it by 3 then. And the recoveries were 66.5. So it was 40, it has gone up. Of course, the recovery here is probably 50, and then maybe 55, and then here it is higher. So probably already 70%. So 66.5. If we just average it out, so that means that production is this times this divided by 31. So 1476 times 3 is 4428, which is exactly what they produced, 4409, almost the same. So these numbers are also correct. Only sustaining costs, yeah, probably higher, but let's just take 917, which is the cash costs actually. But let's just use that number. So that's the 917 here. Okay. The thing to notice is that these recoveries should be going higher to 80% at some point. Latest recoveries here were 61, but they should go higher. For example, For example, if we take another month, September, and if we go to, let's say, 70%, then production should be at full capacity. They said that they were at almost 90% capacity. So yeah, actually, why is this like this? It should be this formula. Okay, mill grade, yeah, 1.67, let's say 1.8 should improve a bit because it's between 1.6 and 2. Ore processed should be much higher. So this last quarter, it was only 40,000 and their capacity is almost 80,000. So that's half of the capacity that they used. So this should go to this number. That's 90% capacity. And let's say that the cost is the same. We don't know yet. So then you get 3,000 production. So that's double the amount of what they have this quarter. So I expect that the production will double now in the next quarter from 4,000 to 8,000. And remember, they only sold 1,000. So we are actually going from 1,000 per quarter sold to 8,000 per quarter sold. That's an eightfold in revenue. Yeah, the 8,000 comes from here. That's 3,000 times 3, 9,000. So 8,000 to 9,000 per quarter. So let's say 9,000 per quarter times 4 is our 36,000. So we should be able to get to 36, 37,000, maybe even 40,000. So let's take 40,000 because if they can actually get to 80% recovery, yeah, then we can get to 40,000. So it all depends on the recoveries. Okay, so we have our gold price forecast. We have production, yeah, for this year 18,000, but let's take a look at next year. 40,000. Revenue is taking into account 80% payability. Then you have the costs with the all-in sustained cost 917. Capex for BIOX. If we don't do the BIOX, then maybe we should be at 5 million. Corporate SG&A was 2 million. Tax rates, I think it was 25%, but if you add all those royalty things in it, probably 35%, I'm not sure. But net income is at 10 million, as you can see here. So that's the projection, 10 million, depending on the capex, of course. If capex is lower, then it can be 13 million. So actually very cheap, PE of 3, Without capex, PE of 2.5, not bad. It's certainly not overvalued. So let's add the capex again for the BIOX. Not sure if they are going to do that or not. But you can see that there's plenty of income coming in the tens millions, 10 to 13 million, depending on the gold price, of course. At 40,000 production per year. Okay, let's see what the enterprise value was. Enterprise value is, they did have losses in this quarter because they were not fully commissioned yet. So losses were 6 million. That should go into profits in the coming quarters. But of course, the enterprise value has changed. We have current assets of 19 million US dollars and liabilities of also 19 million. So they just cancel each other out. For the enterprise value, I also take into account the retirement obligations and tax liabilities. So enterprise value basically is just the market cap now. So 30 million. Current share price is 0.125. In CAD, so divided by 1.35 is 0.0926. Yeah, that's exactly the same. So market cap is 30 million. And we had earnings of 13 million. So 31 divided by 13 is PE of almost 2. A very cheap company. PE of 2 to 3 is very buyable. I'm not going to sell it. Also, we have Murchison. Murchison is valued at 10 to 20 million dollars. I have added it here. That should also be taken into account. So Murchison on itself is worth the market cap. And we have even a producing mine in Malaysia. And that's the orange things here. So this is a really cheap company at this enterprise value. Cash flow is coming in and will exceed the enterprise value at some point. When you look at the book value, equity is 114 million. 114 million and market cap is 30 million. So easy double is possible based on the cash flows and based on the assets that they have. Okay, so that is the update. Let's see if they can improve these numbers in the third quarter. We'll see what the numbers bring. Second quarter has improved from the first quarter, so that's good. Recoveries are increasing, production is increasing, grades have decreased. So maybe because of transition or I don't know, but this needs to go back up to 1.8. Ore processed has increased and is now at full capacity. So let's wait for the third quarter numbers. This is how it looks like. production up, all-in cost down, mill grade, yeah, is also down but needs to go back up. Recoveries need to increase. Production is increasing. So it's all looking fine to me. Just some production problems, but that should be resolved soon. And yeah, share price, I think this should have upside. It's in an uptrend. And if gold can actually go up for once, then this trend can continue going higher. I have not added Murchison yet because we don't know anything about it. We don't know how much they will produce, what the capex is. So we just assign a value on it, 20 million. Okay. So that was the video. And if you have comments, so leave it below the video and I'll see you in the next video. Bye.